All right, guys, once you guys have your chart all set up with your indicator template saved and favorited, the next thing you want to do is take a look at all my time frames here. If you want to copy them, go ahead. From the 1 second all the way up to the 12 month here. The way you would do that is hit this drop down here, all the way down. And when you're on your TradingView Premium either account or 30-day trial, you can create custom ranges here. You could go to 1 minute, all the way to the your monthlies, and you save each one, and then you star it, save it up here. Because if you have the trial and you cancel, you're not going to be able to create these time frames anymore. Okay, so go ahead and do that. Once you're all done, we'll go over what these EMAs and SMAs all are. Okay, so basically, made a little key here. You guys can visualize it better. So basically, all you need to know is your thinner lines are going to be your SMA. Your thicker lines are going to be your EMAs. Okay, so basically, this thinner grayish line is going to be your 5 SMA. Then your thicker white line is going to be your 5 EMA. Going on down, your thinner purple line here is going to be your 11 SMA. Your thicker purple is going to be your 11 EMA. Thicker green is going to be your 21 EMA. Thinner green is going to be your 21 SMA. Right, we're just going down the line here. Your thicker blue line is going to be your 50 EMA. Your thinner blue line is going to be your 50 SMA. Going up here, your thicker yellow is going to be your 100 EMA. Thinner yellow, 100 SMA. Thicker red, 200 EMA. Thinner red, 200 SMA. Your thicker green here is going to be your 350 EMA. Thinner green is going to be your 350 SMA. Thicker pink is going to be your 600 EMA. Thinner pink, 600 SMA. So the main difference between an SMA and an EMA is that the thicker EMAs put more weight on the most recent candles. So they're actually faster moving than your simple moving averages. Okay, so your exponential moving averages are faster moving than your simple moving averages. Okay, so that's the main difference between the two. The way they're calculated. For your 600, you would count back 600 candles, right? We'll just go for the SMA for now. You go back 600 candles, and you would get the high of the range and the low of the range. If you put a line right in the middle of that, that's where this SMA would be, which is your thinner one. Like I said, the EMA is the same thing. Count back 600 candles, get the high and the low of the range. But with the EMAs, they put a little bit more weight on these most recent candles. Okay, this is why with this downtrend, your 1 day EMA just crossed below because there's more weight on it. Your SMA just crossed above. This is not good, guys. You see how over here, your green SMA crossed above your green EMA, way back here. Okay, but we didn't touch it again until this area right here. But you see how it wasn't able to hold because the SMA was above. So that is basically the gist of it. You don't want to see these SMAs crossing above your EMAs if you're in an uptrend, right? So we'll go ahead. With that said, we'll go ahead and start looking for trades. We're gonna act as if we're around here. So this is your previous all-time high. Over here, we broke the all-time high. Dropped, right? Let's look at our situation here, okay? See how here the gap isn't too far away between the SMA, the green SMA and the green EMA here? Over here, we have a lot more of a gap. You know, the SMA is way up here. The EMA is way down here. This is not good. Doesn't mean you can't pump from here. It just means you're losing momentum. So you're probably not going to go hit those $100,000 targets that everybody was talking about back in this time frame, which is November last year, right? So see, like the reason I'm saying it can still pump from here, right, is because your triple 11 EMA SMA and white 5 EMA SMAs are above each other. See this? So when you have this, right, it's still bullish. It's not until they cross below that you're going to start getting bearish. But this is a warning sign, guys. We're probably not going to pump like crazy, okay? So let's just go a few candles forward, see what happens. So we hit that all-time high again. Let's see. We have a bearish divergence on the daily. This is when you start using your RSI indicator here. Boom. You have a bearish divergence. Printed a higher high on the price. Printed a lower high on the RSI. Okay. Not great. Plus, we had this 21 still below. The 21 is still below. Getting close, but it's still below. We just printed a bearish candle. Okay, so we'll go forward one more candle. Damn. This was that nasty $8,000 drop that we had back in early November. Then go one more candle. They were able to cross the 21 here, but now your 5 crossed above. Your 5 SMA crossed above the 5 EMA. Go ahead and hide the price for now. You can see it a little better. See how the 5 crossed back above? Not great. See how here when the 5 crossed above, we crashed down. Boom, boom, boom. 5 crossed above, crashed down. Okay, and this is on the daily. These are a lot stronger EMAs and SMAs here, okay, than lower time frames. So bearish divergence, 5 crossing above, not looking great. See what happens. The 21 is now above, so that'll hold the support for now. Had a little pump, right? Had a little pump. 65K. Damn. Got smacked down. Got smacked down. So this is the thing that happens a lot, guys. Once you get this pump from the 21, if it's not a strong pump, you're going to print a lower low or a lower high, my bad. And then you're going to crash down your 50, okay? Which is the next level down. So that's how this works, guys. You guys see here how we crashed down to the 11, got another pump. But now the 11 SMA was above. 11 SMA is above your 11 EMA, okay? Bam, got smacked down to the 21. Pumped from the 21. Right? Got this pump for the 21. Got smacked down. Bounced up again up to the 5 EMA, which is or 5 SMA, which is now your resistance because it crossed back above, like we said. Got smacked down to 21. Try one more time. Got smacked down to the 50, okay? So it's level to level. 11. When you're bullish, you're going to be jumping off or bouncing off this 5. See this 5, 5, 5, 5, 5. As soon as you drop down to the 11, it's going to take you a little while to recover from that. 21. Bam, 50. Now it's going to be a lot harder to recover from that, right? Because if you look at your whole situation, and this is what you guys should always focus on, we're still bullish here, right? So as you guys have heard me say before, when you get a cross of your 200, which is your red, above your 600, which is your pink, that's a golden cross, guys, right? So once we pumped off the 350. Now your 350 is above, right? 350 SMA is above your 350 EMA, right? All the rest of them are still looking good, you know. Not great though, okay? Especially coming off a one-day bearish divergence, which is very strong. If we go back a bit here, like here, again, drop down to the 50, pop back up, drop down, not quite to the 50, drop down to the 50. 50 SMA stayed above the whole time. Bam, back down to the next level. So the 100, got another pump. Took my money out here. Boom, shorted it. Right. So I didn't catch the exact top. I think I shorted this candle here, 12th of May, 2021. Caught a nasty short, right? Bounced off the 350, 350, 350, 350, 350 SMA. This right here is basically a trampoline, like the lower you push, because the 350 is still above, right? Yeah, here was trying to like catch it as support, but the pumps weren't great, right? Also, you have to look at all of these SMAs, right? When your 50 crosses below the 100, it's going to be hard to just push straight back up into it, right? This is why we kept crashing down, right? And but this is your support, your 350 green 350 EMA is still above your 350 SMA. So once we cross below it, think of it as like a trampoline action. Boom, pushed it up, right? This pump right here was able to save this 100 from crossing below your 200, right? This is bullish. Bam, cross the 100 above, cross the 50 above, cross all of them above your 200. Crash back down. Why? Because look at this. This 200 SMA is now above your 200 EMA. Okay, crash down. Bam. But now all of these are above, right? But this pump, we would have known it wasn't gonna go too far. I mean, it was a great pump. Don't get me wrong. But what I'm saying is, we weren't gonna hit these $100,000 targets that everybody had back then, because your 200 SMA is holding it down, right? So here, bam, 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 cross down. So basically, you want to look at your longer term time frames like this and establish your bias, right? So at this point, still bullish. Another thing that happens, guys, is pay attention to these gaps here. This gap, these EMAs don't like to be so far away from each other. See how here they're very close? They started getting farther and farther away. It has to come down to get them all together here. Right? Try to get another pump. Again, got not too separated, but they got separated. Plus, you had your 200 EMA over here above. Okay, so they tried it. Right. Keep playing it from here. Bam. Okay. Smack down. Your 21. Zoom in a bit here. Also, guys, another thing to keep in mind here is your EMAs for your RSI. When the green is above the pink here, that's bullish. Once your RSI crosses below the EMAs, that's bearish, okay, guys? And then once your green crosses back down below your pink, on the daily especially, not great, okay? So here, with this pump, and try to cross these EMAs back above, it couldn't. Tried one more time, it couldn't. Failed. Bam, bam. This is why we fell so much, guys. Fell to the next level. So all these EMAs are important, guys. All of the EMAs are important, and all of the both of the RSI EMAs are important. Same concept. You get the crossovers, right? So you have to pay attention to the SMAs if they're above their respective EMAs, but also you have to keep in mind these crosses, right? So the 11, which is your purple, just crossed below your 21, which is your green, and obviously your 5 had already crossed, right? So they cross in succession. 5, 11. We'll see if the 21 crosses below the 50. You know, but the 50 is not looking great. The 50 SMA is above now. Okay, so we'll see what happens here. Bam, got smacked down to use the 50 as a resistance. Why? Because you have your 11 here. Your 11 is below the 21 here, and then your 50 SMA is above 50 EM. Bearish. Okay, all of this is going to be resistance, whole cluster. Bam, smack down to your 100. use that as support though, because your 100 is still above, right? The 100 EMA is still above the 100 SMA. So at first, guys, it's going to be confusing, but trust me, guys, this is incredible. If you get this down, it's a matter of practice. What I recommend doing, guys, is going down to like the 1 minute. I use the 1 second. It works on any time frame, guys. So you can go all the way down to the 1 second and watch how they move, and start seeing the patterns, right? Because I know it's a lot to take in when you first start looking at them, but it's an incredibly accurate system, guys. It's almost ridiculous how accurate it is. So okay, use the 100 support, where all this is going to be resistance still. Right here, they were trying to save this 21 from crossing the 50. Couldn't do it. Bam. Knock down to your next support, which is your 200. Bam. All the way down to your 350. Okay. So once this failed and the 21 crossed below, that's bearish. Okay. So usually, especially on these higher time frames, it likes to go level to level. This is why these long wicks right here, it went below the 200 and the 350, right? So it got bought right back up. See how your 200 is above your 200 SMA? Your 200 EMA is above, so it's trying to use it as a support. Probably get a pump here. I mean, your 5 still below your 11, your 11 still below your 21, your 21 is below your 50, and your 50 is getting close to crossing down the 100. We'll go smack down again. But your 200 is still above, okay? So this is why this is acting as support this whole time, right? But also as resistance. These smaller EMAs here, your 5 and your 11, are acting as resistance. That's why it keeps crashing. Boom. Short the 11, short the 11, short the 11. That's what I kept doing in this little area here. Until, see how there's a fat gap right here between the 5 and the 11? Here they're getting a lot closer. You're going to start seeing potential pumps here. Because now what it's trying to do, right? Look at this. So your 5, especially when it's ranging like this, it's going to be all over the place. It's going to be crossing your EMA, your 5 EMA. It's going to be crossing above, below. But what you want to start seeing, you see how here they're pointing straight down? You want to start seeing this like curvature here. When you start seeing the curvature, that's when you can start seeing pumps. And see how the 11 crossed above, your 11 EMA crossed above the 11 SMA here? And your 21 is getting very close also to crossing above. Your 21 EMA is getting close to crossing above your 21 SMA, right? Right here. So you have to, this is on the daily, guys, so you guys have all day to literally see where each of these are compared to all of the other ones, right? Boom, got a pump. Pump, right? 21 crossed above. We're probably, gonna try to break that above. Plus your 200 still acting as support here. So like, see what happens. Bam. Got that pump to 52K. On the shorter time frame, I literally shorted the top here. And bam. Right. We also just got the blue 50 EMA crossing below the yellow 100 EMA. Your 350 is above. This is why this 200, even though it was above, wasn't able, still got a pump, but it wasn't able to hold because your 350 is pulling it down. Your 350 SMA is above your 350 EMA. Pulling it down. Bam, bam. Went down. Okay. But yeah, guys, this is basically an introduction to this strategy. So I'm just showing you how these EMAs and SMAs, the relationship between them and how they move, how they work. In my course, I'll go deeper into how to use different time frames to be able to catch some juicy trades. All right. So this is just an introduction, and I'll have the course out ASAP, guys. I'm working on it every day. So here, guys, this is when we were at the this is when we were at the this is your macro fib. The macro fib, I pulled it from your all-time high to your bottom of the of this bull trend here, which was your COVID crash here. Okay. So we'll just zoom back in here, guys. A lot of you guys were in my trading group when I was we were stuck in between this macro fib right here, this golden pocket, this macro golden pocket that I kept talking about. I kept, going the tops along these bottoms here. Again, on lower time frames, you guys could go back and see how I was doing that on my trading group. If you guys like to join my trading group, the link is in the description, guys. Go to Patreon and support the cause, guys. So keep going here. I kept telling you guys back when we were in this area that Bitcoin needed to hold this this macro fib right here if it didn't want to see some more downside 30,000s. So I'll just go keep going here. And I kept telling you guys, once you see a candle close below, all the candle closes are above here, above the 618. I said if we see a candle close below, we're going down, right? So see how the 5. Well, I'll go back a little bit just so you guys could see what I'm talking about here. When we were here, a lot of people kept calling for these reversals here. It wasn't looking great on this daily time frame here. See how the 5 EMA and SMA are below your 11 EMA SMA? Here, they crossed in between these two, right? And you guys go back. I told you guys once a 5 EMA crossed back below the 11, I told you guys it's not good. We're going down. So it the next candle goes here, got the last pump, and then crashed, right? Got this pump, tested the 21, couldn't break the macro 0.65, right off of it, closed the daily below the 618. On a shorter time frame, I hit the retest, the drop, hit the 618 again, shorted from the 618, and caught that nice short there, right? All the way down to the 600, where I took profit. And I told you guys, now this really has to hold. Okay, this the 600 is still above. The 600 is your strongest support. That's going to be that's usually going to be a strong support. We're at least going to get a pump from there, right? I'm telling you guys this might be the bottom when we're here, but I need to see confirmation. Got some confirmation on lower time frames again. I believe I longed this wick here on a shorter time frame. You guys could go back to my Telegram, see how I did that. I believe I caught this wick right here. This is actually where I caught the long from. Pumped. Crashed off the 21. I kept telling you guys 36,000 needed to hold, which it did. and then we got that nasty pump right back to the macro golden pocket where we dropped from before. Bam, right? Crossed above it. Stretch back down. Cut a long when we touched the 618 again. I just kept longing the 618 every time it hit it. Scalping on shorter time frames. Bam, caught this long right here. So I hit this wick. Boom. And now we're just holding here, guys. So we're right now trying to hold this. We just lost the 350 here. It would have been nice if it held as support and pumped. But now we got to hold this macro 0.65 and want to keep pumping, all right? So again, look at our situation. The 21 is still above the 21 SMA, so this should be support if it drops this low. You don't want to see it dropping back in here, though, guys. Like, if this is going to be bullish and potentially break above 50,000, you don't want to see it ranging here and then fucking trying to pump. This pump has to be drastic. It has to be quick, right? So you want to hold this level, keep pumping. Ideally, you would have held this 350 and pump from there. But all this right here is resistance, guys. Literally, this whole range from 50,000, 45,000 to 50,000, that $5,000 range right here is strong resistance. We have resistance all throughout here. On the daily, which is huge. On the monthly, which is huge. So that's where we're at now. This is how you use these EMAs, SMAs. Hope you guys got something out of the video, guys. See you on my Telegram channel. Link in the description. Leave a comment, subscribe. Thanks again for watching, guys.